Welcome back to the Twister Topic Show, where we cover everything from blockchain technology, NFTs, and open discussion regarding what's going on in the world. If you like my videos and what I'm doing, please leave a like, comment, and subscribe. Now, we're going to begin. Today, we're going to be talking about real estate and how hedge funds are buying up property around the world in a great migration over to real estate and why exactly this is happening. We're just going to take a quick look at the News Nation clip here where they're discussing the pros and cons, well, mostly the cons that's happening within the acquisition of real estate when it comes to these hedge funds. Take a listen.
We ban companies from buying homes. In this case, the companies are hedge funds. Now, some Democratic lawmakers are trying to do just that, introducing a new bill that would ban institutional investors from buying and owning single-family homes in the U.S. For some context, a recent study by MetLife Investment Management found that by 2030, so in some 7 years, institutional investors could control 40% of single-family rental homes. This is part of your family business, generational. Mick?
I started politics talking about property rights.
Okay.
Housing is too expensive. Do you know why? Because we don't build enough. That's it. That's the bottom line. California has been underperforming by more than 1 million units a year for the last 20 years. We simply don't build enough houses. Why? Because folks move into a neighborhood, they love it, they don't want it to change, they go down to their local town council and say, don't let anybody else move in here. It happens in every single town, called NIMBYism, not in my backyard. And I'm not sure the federal government changes it because it's a local issue. If you want housing to be cheaper, though, just build more housing.
The tax structure, however, has also contributed to this. In many cases in California, people who have empty real estate, they're getting a loss for that on their taxes. And so there's an incentive to not have it occupied by someone who needs that house.
Okay, but losses only get offset against gain, and you don't have any gain.
But this is the problem. So when you have all these hedge funds buying up all of this critical housing, I have a big problem with that.
But those hedge funds are companies, right? So it goes back to the question, are you cool with telling companies you can't buy homes?
Well, I think that single-family homes need to be protected. We need to have more protection for our communities to have access to those homes. We used to.
More houses are going to be built when there's more buyers.
But we used to.
There are a lot of people who are in the market and are trying to buy. Housing affordability, I agree with you, is one of the biggest concerns. And we hear that from coast to coast and all the way down the middle. I think that this is a problem. The private sector there has to be regulation here. One, because I don't think that we're building to the extent that people actually need homes. We're not building fast enough to meet the need of families across this country. In addition to that, they're not able to afford the homes that are already there, and they're getting priced out. A lot of that is because of utilizing multiple spaces for business growth rather than home ownership. The other part of that is because of what we just saw, because of what we were talking about here.
Last word, real quick.
I mean, I think J.D. Vance was saying the exact same things that the Democrats are saying. This is a populist cry. I think what matters is getting the bottom of what's really causing this at a systemic level. But for a lot of those institutional investors, we would not have a Detroit because only those kinds of organizations can help a Phoenix rise.
All right. Well,
So as you heard from the host there on the news show, that they're coming in and they're buying majority of the supply of single family homes. Now, when understanding the market, as you know, that creates a bottleneck within inventory. And that's what we've been seeing ever since 2019, where you had all these big hedge funds buying lots and lots of property, and it's been closing the inventory, and this is what's pushing a lot of developers today to create more homes. Now we're going to look at this article here. It says lawmakers want to stop hedge funds from buying up houses. Buying a house right now isn't easy with interest rates at 20-year high amid soaring property values. While Congress has little say over things like interest rates or property values, some lawmakers are considering taking action that restricts some of the buyers' competition. You may think the only people interested in buying a single-family home are families. However, that hasn't been the case in recent years. Many hedge funds and companies with big budgets have been buying up homes as well. Oftentimes, the hedge funds can pay all cash to sellers and quickly turn the property into a rental, leaving families out of luck. According to the Urban Institute, as of June 2022, large hedge funds owned around 574,000 single-family homes nationwide. 27% of single-family homes sold during the first 3 months of 2023 were purchased by large financial groups. Now, that is absolutely insane, considering what's going on in the world right now, where you have people coming out of college, people coming out of university, and they can't even afford their first house. You know, making incomes that range from 70,000 all the way to 150,000. They still can't afford a house because of the interest rates. It's insane. But I digress. Moving on. We're looking here on the Financial Post. The U.S. investment giant Blackstone expansion into Canadian real estate raises concerns. Now it's crazy because we were just talking about this news here, and they were talking about implementing a bill in America that's going to stop the buying of houses from hedge funds. But then we go here, and mind you, this was dated in 2023, December of 2023, right? To stop buying houses in America. Now, this was in June 2022, where U.S. investment giant Blackstone expansion into Canadian real estate raises concerns. Let's read. Blackstone, a New York-based company that manages $881 billion in assets, has decided to finally open its first brick-and-mortar office in Toronto, with the intention of expanding its real estate holdings. Why Canada? We have spent a lot of time in Canada over the years, and now is the time to have a senior member on the ground in the country. The company hired Janice Lin to lead its real estate business in Canada. Lin previously served as a chief investment officer at Revera, a global retirement living business with residences throughout Canada, US, and UK. The spokesperson said that the strength of the Canadian economy, the nation's world-class cities, and favorable immigration policies were the reasons behind its move into Toronto. Canada's population growth is highest among G7 nations and is nearly double that of the US. In addition, our real estate assets in Canada consist primarily of logistics, a segment which continues to thrive. Notice how it says primarily of logistics, meaning commercial property. Well, let's take a look at the next article, where it says Blackstone, and mind you, this is January 19th of 2024 now. So they've been going back and forth on this a long time, because this is dating all the way from 2022. Now we're going over to this year in 2024. Blackstone to buy Toronto's Tricon and $3.5 billion rental housing deal. Doesn't seem like logistics to me. Is adding to its bet on rental housing with the $3.5 billion deal for Tricon's Residential Inc. Blackstone agreed to pay $11.25 a share in cash for Tricon, a Toronto-based company that owns single-family rental homes and apartments. The company said in the statement Friday, Blackstone Real Estate Partners X is teaming up with the Blackstone Real Estate Income Trust for the deal. The move plunges Blackstone deeper into a single-family rental industry it helped create more than a decade ago, when it led charge of Wall Street's firms buying houses in the aftermath of the United States foreclosure crisis. The firm's initial effort ended in 2019 when it sold off its shares in Invitation Homes, which it had previously taken public. Blackstone didn't stay out of the industry for long. The company led a preferred equity investment in Tricon in 2020. The next year, it agreed to buy Home Partners of America, a single-family landlord that offers clients a path to ownership through rent-to-own contracts. And this has been a big thing in Canadian real estate, if you guys haven't known. In regards to America's real estate, there's a big push in Canadians' real estate to get renters to rent, to own. And this is in the long term, it's filling up the pockets of these hedge funds, because majority of the rental properties that are to be rent to owned, they're offering rent at a high price. Okay, let's continue and read along. This is the CMHC scraps the first time home buyer incentive. Now, this is insane. Canada's Federal Housing Agency is scrapping a shared equity initiative intended to make easier for first-time home buyers to crack into the housing market. A notice on said interested parties have until midnight on March 21st to submit or update applications for the first-time home buyers incentive. After March 31st, the program will no longer approve new requests. A notice on Canada's Mortgage and Housing Corp website said interested parties have until midnight to submit, the first-time homebuyer incentive. After March 31st, the program will no longer approve new requests. The program was first rolled out in September 2019 as a key initiative under the Liberals' National Housing Strategy. Now, this is crazy because, once again, this is just yesterday, or March 1st. This was just March 1st. Now we're looking at Blackstone try the housing deal. This is January. And now we're looking at this over here. This is in December. So the times that this is happening is almost simultaneously. Them moving into a different market, like the Canadian market, grants more profit margin and less stress, Now we're going to move on. In my personal opinion, I think that you are seeing the acquisition of real estate being purchased at this grand scale and being implemented as rental properties at first, and later down the line where renters could rent to own. What it's preparing is the tokenization of real estate. Now, this is Propy. Now, if you're not familiar with Propy, Propy is an AI platform for real estate listings. If you want to list, if you want to buy, if you want to, whatever you want to do, this is for exactly that. Now, it utilizes AI in order to sell houses and to make it easier because it runs on the blockchain. Now, you're looking here. If you could browse all listings, you could see a big list of homes that are on sale already on the blockchain. These are all on the blockchain. So when these houses are ready to sell, they're settling without an intermediary of brokers in the middle. This is all done through Propy's platform. So we'll just click a property, for example. This property is 265. Now, as you can see, it's all depending on the owner's discretion on which currency they would rather accept for their property. In this case, it's USD, which is an American currency, right? But of course, you could change the areas on where you wanna sell. You could pretty much put anywhere in the world on this platform and be able to utilize it. But that's just one person. You're able to use multiple currencies if you'd like. Yeah. So it says here, the future of real estate is now with Propy. Agents, buyers, and sellers all over the country love the simplicity and security of Propy. Propy has processed 4 billion in transactions for consumers and agents from Compass, EXP, The Agency, Redfin, KW, Remax, Realty Austin, ACME, and others. Buy, sell a home via bank transfers. Find a tech-driven agent. Accept offers. Pay down payment via Propy online payment in dollars, and close a transaction with our integrated tech-driven escrow and title company. And you could also buy, sell, and home using crypto. find a crypto certified, accept offers in crypto via Propy, pay via Propy crypto exchange in the cryptocurrency, and close a transaction with the crypto-friendly escrow and title company on our platform. Or you can buy and sell your home as an NFT. Experience the breakthrough couple-click home buying via real property NFTs. Propy has invented the world's first home NFTs. You can list a property as an NFT as well as on MLS. When you buy a property NFT, there's no need for 30-day closing. This is huge. When you look deeper, and here you could just see, you could choose if you're an agent, you could choose if you're a seller, and you're just a buyer. Let's click I'm just curious. And there you go. We believe in a world where barriers to real estate ownership are removed. And this is a great platform because it's setting up the stage for individuals to be able to be involved within their own processes of selling and buying their own homes. But when you have hedge funders buying these properties at an alarm pacing rate, you could see what's coming down the road where they're going to be utilizing these platforms such as Propy and being able to sell. Now, there's also other platforms that use digital assets where you actually could profit on these properties, but I'll talk about that another time. Today we're just looking at Propy. Yeah, I thank you for watching this video. I'm just bringing awareness on wherever news I see. I've noticed that this news came out not too long ago, and I wanted to really dig into what's been going on within the real estate market and how it ties into digital assets and how you can get involved by also, if you're owning property, to start thinking about, start to look and see how you can incorporate these things within your real estate investments. All right, so thanks for watching. If you like the video, leave a subscribe, like, and comment. I'll catch you in the next one.